Hello, thanks for joining me again. This is the US Futures weekly chart analysis for the week ending 25th of June 2022. The first chart is the US dollar index as usual. Now, we'd seen some supply coming in here and suspected supply came in last week from the highs up here on the very high volume. But this week spreads narrowed. Volume was below average and price didn't move at all or even threaten to move below the lows of the previous bar. Supply wasn't drawn out this week. This was a test for supply effectively, and supply was found to be low. This leaves the door open for price to accelerate higher again. If there was further downside follow through, especially if it threatened the lows of that bar, then it would perhaps change the situation. But at the moment, supply was found to be low last week. There was no downside follow through. There was no ongoing supply drawn out, and the market didn't threaten to break down at all. Spread narrowed, traded as an inside bar on below average volume. This leaves the door open for the market to make an attempt to push higher. The next chart is the E-mini, the S&P 500 futures. Price reversed to some extent this week, and it did close above this little gap that was left behind. The lows of the range were here and prices closed well above it this week on below average volume. So that means selling pressure was very low this week. That allowed the buyers to move the market higher with ease. Now, don't get too excited about the upside just yet. This is the level that you really want to look at if you're looking for any sort of upside break, any sustainable upside break. And there's likely to be considerable selling pressure within this range here that price is going to have to work a way through. So I won't be surprised to see some sort of failure in here. But this is the important level to the upside. A break above this level, and perhaps a test, would certainly allow for price to move higher. But I'm expecting increased supply within this zone. See how it negotiates a path next week. The 10-year note futures. This generally trades the inverse of the E-mini. But this week, they were both up in response. Price appeared to catch a bid last week, and this week has responded positively. You can see there was a little test for supply during the week, and price pushed up in response to that. But it wasn't strong enough to move above the lows of the range on below average volume, so selling pressure was light. This market must still be under some pressure if selling pressure was light, yet price couldn't sustain itself above this breakdown line and still moved back down to the relative safety below it. So I won't be surprised to see some sort of test for supply next week, something like this perhaps, but we'll see. We'll see how it responds next week. Copper price futures broke down this week. Here's the lows of the old range, and this was the last gasp lows. You can see price broke down the previous week, and that was confirmed this week with price accelerating lower with an increased spread on slightly increased volume and a close right down by the lows of the bar. This was a confirmation of the previous week's breakdown, and there was a lack of buyers in the market which forced price to stretch lower in order to find enough buyers to satisfy the sellers. Now we'll just see where it closed. I see. Okay, you've got this little congestion zone here, and price is likely bounced off the top of that here. So there is some expected previous support in this sort of level, and at this point prices bounced off that. If we put those other lines back in so you can see where we were, this is last gasp, previous support here. This was the important level. You see prices accelerated down now on an increase in volume and bounced off the highs of this previous support zone. We'll just have to see if the market's strong enough to hold on. There may be a test for supply next week, and if that's found to be low, price could attempt to reverse. To some extent, it'll depend on what happens in the US dollar market. If the US dollar moves higher, this market will be under pressure and facing headwinds, and that could really make it test this zone here, just above $3.50. Okay. The next market's gold futures, gold price futures. It's been very resilient lately. The important level is here, important level to the upside, and price has held on really well within this range. Price was an inside bar this week. It traded inside the range of the previous bar with a much narrower spread on below average volume. So selling pressure was light this week in the market. This opens the door for some sort of attempt to push higher, perhaps back up to the highs of the range, if selling pressure remains low and perhaps trading conditions improve somewhat. So if the US dollar market was to test for supply early next week, that might offer the opportunity for this market to push up to the highs of the range. The market's been very resilient. It hasn't threatened these lows pretty much at all recently, and when it has, it's bounced back up off the lows of the range pretty comfortably. Silver price futures, the lows of the range are here, and your new lows are there. Price traded as an inside bar this week, but with a wider spread than what the gold market saw. And the gold market had low volume or low selling pressure, where this market has seen above average volume. So selling pressure was still there, but it was absorbed by the market, so that's a positive. This market's nowhere near as strong as gold at the moment. It's not as resilient as gold, and it's being moved around by market forces much more easily. The same thing goes as with gold though. If the US dollar index starts to move lower early next week and test for supply, that will offer the opportunity for this price to move higher. Whether it will be enough to challenge the highs of the range, the old breakdown line, is debatable. $22 is turning out to be a difficult level to crack in this market. Light crude futures broke out of their bullish absorption last week, which was something like this, and you can see it dropped out last week. This week prices moved lower and then recovered off its lows on average volume. We always like average volume. Excessive volume is always an issue, and low volume is always an issue. Average volume gives you confidence. So on this market is attempting to stabilise and consolidate after breaking below the lows of the range last week, and it appears to have done so pretty well on average volume, closed well off the lows and slightly above the mid-bar. This leaves the market in position to move higher in response if trading conditions are favourable. And if they're not favourable, a further test for supply, kind of like this, is another favourable option. Okay, the next chart is Aussie dollar currency futures. The important level above is 70 cents. Price penetrated it quite deeply here and did recover, albeit on falling volumes, which is not strong. There's been a second challenge to the 70 cent level, and the market has traded sideways this week on low volume. So it was a bit of a nothing week the market was marching sideways. I imagine there was some testing for supply and selling pressure was found to be low, but when price did move higher, there was no demand. There was not enough demand in the market to sustain higher prices, and that left price trading sideways, almost level. It's not weak, but it's not strong. The last market is Bitcoin futures. Bitcoin futures are having a bit of a time of it at the moment. Price broke down last week, and the buying that we saw here was probably dumped. This week the market's attempting to absorb supply for a second time. There was quite a bit of potential absorption going on through here, but the market dumped last week and broke down below the lows of this bar. And this week volume's very high again, narrow spread bar. This was the market absorbing supply and moving sideways in response. It's good that it's held on to 20,000. It really needs to hold on between 16,000 and 20,000 if possible. Otherwise price will potentially break down further. So this was a good sign, although we have seen the market absorbing supply previously and broken down. So I wouldn't be getting too excited right now, but it is promising. And just back to the US dollar index before we close. This is the highs of the range. Price would need to break this level to really be in any sort of weakness. And then you've got the lows of the range here, where if price broke through, there would seriously be a turnaround in markets. This week, price saw low selling pressure, which leaves the door open for a push higher, whether that's just up to the highs of the range again, remembering that supply's been drawn out at this level previously, or whether there's another breakout. We'll have to wait and see. Okay, thanks for your time again. See ya.